Hello, good afternoon. Afternoon, Facebook, afternoon, IG. How are you guys doing out there today on this lovely Thursday afternoon? Hi, welcome again to PROBY'S Tax and Accounting live Q&A every Thursday afternoon. Elaine Proby here, CEO of PROBY'S Tax and Accounting. And I want to welcome you guys today on this live. We've got some very valuable information for you guys today. I have a question that's asked of me every single time I talk to a client or they come to my office, come to my desk, they call. We get this all the time. Most people are very interested and a little confused about refinancing your home loan. And everyone wants to know, should they refinance in their home loan? Is it a good idea? What's the best thing to do and how to go about refinancing your home loan? Okay, so today I want to talk about three different things on here. Some of the reasons that you can refinance your home loan. I want to touch on the very first and foremost reason that you refinance your home loan, and that would be lowering your mortgage interest rate. That's one of the main things that you would need to know if that's going to be effective for you in order to refinance your home loan. Okay, so the first point that we're going to talk about today is lowering your mortgage interest rate. And then the second thing we're going to talk about is taking cash out. A lot of people is always confused. Should they refinance and should they pull any money out, or should they just refinance to lower their interest rate? Okay, so we'll talk about one, refinancing to lower your rate. We'll talk about cash out, and then we'll talk about the tax effect on doing both of those, and how, of course, how it's going to affect you tax wise. Okay, so once again, I want to welcome you guys on here. Hi, Lerna. How you guys doing? Hey, Tuke, how are you? Again, Elaine Proby here, CEO of PROBY'S Tax and Accounting. And let's jump right into this today, guys. Should you refinance your home loan? Okay, now this is a big question, and most people are a little confused because, once you invest and purchase a home and you have this 30-year mortgage, for the most part, that's pretty typical. And a lot of people are a little comfortable, so they just sitting there with this 30-year mortgage. However, there comes a time when you need to evaluate your 30-year mortgage or 15-year mortgage, 20-year mortgage, if that's what you have, and see if it is the best thing to do to refinance, okay? So one of the main reasons you would want to refinance your loan is, look at it this way. If your interest rate, if you can refinance and get at least 1 or more % less on your interest rate, guys, you want to take a good look at your mortgage, and that would be a good reason to refinance, okay? So first of all, the going rate right now is anywhere in the low twos, like 2.25, 2.18, up to 2.5, anything under 3. So take a look at your mortgage interest rate. See if you're over 3 points. If you're over 3%, if you're in the 4%, for sure. 5%, you definitely want to refinance your mortgage rate, your mortgage loan, and get a lower interest rate. So this is what happens. A lower interest rate will lower your monthly payment, okay? A lower interest rate will lower your monthly payment. It will save you hundreds of dollars monthly. So if right now, just think of on this one, if you are paying anything above, say, 4%, and interest rate is in the low or mid twos, or even at 3%, let's say, at some of it, depending on what lender you're using, then I'd say it's a very good time for you to refinance. Now, once you look at your interest rate and realize that this is a good idea, that we should refinance, get a lower interest rate, get a lower mortgage payment, save hundreds of dollars on a monthly basis, guys, you can now take that savings and set it aside, invest it into something else, and or maybe put it into some other vehicle that will give you higher interest rate and some more payment return on your money. So this is what you want to look at. Okay, what is it going to save you, and should you refinance? And then you also need to look at the terms that you're going to refinance for. Okay, so most of the mortgage loans are running 30 years. You can do a 20-year, and you can do a 15-year. What some lenders suggest, and some people will suggest, if your interest rate is low enough, you might want to go from a 30-year loan to a 15-year loan. Okay, if the rate is low enough, What this will do, guys, it would allow you to pay off your mortgage faster. It would allow you to build more equity in your property, because now more money is going towards your principal balance and less is going towards interest. Okay, so let me repeat that. If your rate that you have now and the going rate, if it's low enough to where you can refinance your mortgage and pay less monthly, you will increase the equity in your property much sooner than if you stay with a high interest rate and paying a 30-year mortgage. So you want to refinance it. You may want to go for a 20-year mortgage. You may even want to go to a 15-year mortgage. Okay, pay off more on your interest and have more equity. Okay, so that's one reason why you would want to refinance to lower your mortgage payment, guys. That's one of the main reasons that people need to look at. And you want to visit this on a regular basis because the rates are going up and down. Okay, the rates are going up and down, and when it's at an all-time low, this is when you really want to look at the mortgage rate that you have now and the rate that is going, and then you want to think about refinance. Right now, there's another reason you definitely want to refinance in terms of lowering your mortgage interest rate. If you have, for instance, you have some adjustable rate mortgage, guys. I know a lot of adjustable rate mortgages are not as common anymore, but if you have an adjustable rate mortgage, you want to refinance for a fixed rate mortgage loan. Okay, you want to refinance for a fixed rate mortgage loan. So your interest rate will be lower. The mortgage payment will be fixed over term, over the 20-year or 30-year period. You won't have to worry about your payment changed at all. And so for sure, if you are in any adjustable rate mortgage, guys, you want to refinance, lower your payment, and get a fixed rate mortgage, right? So those are really the main reason why someone would want to refinance your mortgage. And I'm telling you, this question is so common. Everybody wants to know, should I refinance? Should I refinance? A lot of people don't want to go through what it takes to refinance, but when you think of the savings that it will make for the long run, your monthly payments being less, more equity in your property, you can pay it off much sooner, of course. And then if you have an adjustable rate mortgage, you turn that into a fixed rate mortgage at a low interest rate, and your payments are lower, and you don't have to ever worry about it changing, right? So that's the beautiful part of getting a fixed rate mortgage at a low interest rate. All right. So guys, today, for those of you who just jumped on there, it says that we're doing the refinancing your home loan. And I have a couple more points that I want to make here today. The second one is going to be into jumping right into this one. It's cashing out on your mortgage. Cashing out on your mortgage, guys. So, all right, we talked about paying a lower interest rate, building equity. Now, for you guys, building equity in your property, the equity in your property, the equity is the difference between the fair market value of the property, what you can sell it for today, and what the loan amount is. Okay, so that's the equity in your property. Now, to do cash out, that's my second point, to do cash out. Most of the lenders is going to give you up to 80% of the value of your home. You can pull cash out. 80% of the value of a home is what the lenders are going to look at, right? So you can cash out when you have enough equity in your property. The difference between what it's worth and what your loan amount is. Now, there are several reasons that people want to cash out. One of the main reasons, a lot of times people want to pay off debts. They want to just, consolidate. They want to get some cash out for that. The other thing that they want to do is maybe they want to, for education, their kids' education, they may want to do that. And just in terms of having some money that they may want to invest, and we're going to talk about that in a minute. They may want to pull some money out so they can reinvest. Okay, guys, when you're doing a cash out mortgage, a lot of loan, a lot of times you want to make sure that you do the math. Okay, you want to make sure you do the math. You want to make sure that the amount of money that you're pulling out based on the interest rate that you're getting, your mortgage is not going to be unaffordable. Okay, and it also add more term on your loan depending on how much years you have on there, whether it's a 20-year or 30-year loan and how long you've been in the property. So for instance, if you've been in your house, say 10 years already, your mortgage was 30 years, now you're you have 20 more years to pay your mortgage, and you refinance and pull cash out, depending on where your payments are, you may go back 5 years on your mortgage, or if it's affordable and the rate is low enough, you can pay similar to what your payment is now and still get pull cash out. Okay, I've seen it done all the time. What you could do is, and you have to really do the math, guys. You really have to do the math. You can pull cash out, and you can have your payments pretty close to where they are now, simply because you have gotten a lower interest rate. Okay, you have gotten a lower interest rate, so it allows you to pull cash out, and your payments is not that much more. All right, so let's think about what happens when you pull cash out, guys. When you pull cash out, a lot of people, like I said, you would pay off debt. Sometimes you consolidate. And then one of the main things that a lot of people have done is they use it to buy another home or another piece of property. Okay, so if you want to acquire more real property and you have a lot of equity in your home, guys, a good idea is to put your equity to work. Okay, pull the money out, cash out, and reinvest it back into some real estate, a second home, or some investment property. Okay, so that's another good reason why you'd want to cash out. Right? So, guys, should I refinance my home? Well, two great reasons. One, lowering your mortgage, and two, cash out for either consolidation of debt or to reinvest in some more real estate and build your portfolio. Okay, so all right. Well, thank you guys for all jumping on here today, and we're going to get into the third reason that refinancing your home, what the effect is on doing either cash out and or lowering your mortgage interest rate. Okay, so let's go on to a third point. Number 3, guys, the tax effect, how your taxes are going to be affected by doing either one of these or both. Right? Let's take the refinancing and lowering the interest rate, guys. So what happens is, one of the greatest write-off, greatest deduction on your Schedule A for people who are itemizing, who own a home, is writing off your mortgage interest. Writing off your mortgage interest and your taxes, guys, it lowers your taxable income and you pay less taxes, right? You write off your mortgage interest, lowers your taxable income, you pay less taxes. So one of the tax ramifications, if you lower your interest rate, right, now you're paying less interest, and you're having more less of a write-off, right? Less of a write-off, and so your taxable amount has increased from what you normally pay. Okay, so let me make that clear again. What happens is, because you have a lower interest rate, your mortgage interest is lower. So when you file your tax return, the deduction for your mortgage interest is lower in the year that you refinance than it was previously. Okay, so a lot of times my client will come to me and they would be a little surprised because now they're paying more in taxes. And the first thing I look at, I says, okay, well, your interest last year was $8,000 or was $12,000, and this year it's $6,000. And they go, oh yeah, well, I refinanced. I says, okay, great. So now you've lowered your mortgage interest, you have lowered your write-off and your deductible. So now you don't have as much to write off, and so you pay a little bit more in taxes. But here's a good point, guys. Here's a good point. There's always a good side to this, right? You might pay a little bit more in taxes, but in the long run, what it saves you for lowering that mortgage interest rate, what it saves you, you build in so much more equity in your property. So you will benefit from it in the long run. So you just have to look at the advantage and disadvantage. Paying a little bit more in taxes, paying less mortgage interest, and acquiring more equity in your property in the long run is a lot more beneficial. So it's not such a bad idea to lower your mortgage interest rate, guys, and then even if you have less to write off in your taxes. Okay, so that's the refinancing for a lower mortgage interest rate. All right, so tax effect on cashing out. Okay, tax effect and cashing out. So this one is a little bit more exciting, because what happens is, when you cash out, if you invested in another piece of property, let's say another home, because you can own a second home, and you do an investment property, Now you have other write-offs on your taxes. Now you have an investment property. Now you have other write-offs that you can take on your rental property that you have invested that money in. That will still save you on taxes. So now what you have done is you would have more write-off on your taxes. You would have more write-off in your taxes, and you have another asset. You have another piece of property. Okay, so you acquire more assets and you have more of a tax deduction. So that's an excellent way to go. Of course, if you use that money, guys, to reinvest it in some more real estate, a second home, and or if you reinvest it in some other investment property for a rental property. Okay, so there is a major benefit to this, guys. If you ever question yourself and want to know, should you refinance your home, don't have your equity sitting there. Don't have the equity sitting there. And of course, if your rate is more than 1 or 1.5% higher than the going rate today, you definitely want to refinance. You definitely want to save a lot of money on your current payments, and then you want to reinvest that money. Okay, so have to put your equity to work. All right. So guys, today this is Q&A. So I'm going to recap all 3 of these points today. And if you have any question regarding this topic today, I want you guys to ask them, because it is so common, and most people, they don't know whether or not they should do this. And of course, it takes a lot of configuration, a lot of math, a lot of looking into what's going on. But of course, you can always get help with that part of it. Okay, so today, guys, thanks for coming on here. Our topic: refinancing your home loan. And the first thing that I talked about is lowering your mortgage interest rate, pay less. Second thing is taking cash out, reinvesting. And third, the tax effect. You're going to maybe pay more taxes if your interest rate is lower, but in the long run, more equity. And or if you reinvest in another piece of real estate, guys, there's more to write off and you save on your taxes. So this is what we want to talk about today. If you guys have any questions, I'll see something over here. Hi there. Hi, Laverne. How are you? Okay. Oh, yeah. Great information. Thank you. Thank you. Thank you. Thank you. Hi, Andy. Here, my beautiful auntie. Hey, how are you? Day, what's the difference between interest rate and annual percentage rate? What's the difference between interest rate and the annual percentage rate? So the difference between the interest rate and the annual percentage rate, it's the way they do the calculation for whatever the going rate is, and they take the principal balance and they take the interest rate and figure out what that amount is, Dre, and then they divide it by the monthly and come up with what they call the APR. A lot of times that's a little bit different because of the way the calculation is done and the days and the months involved, and that sometimes that's a little bit different. And if you notice, you always say this is my interest rate and this is the APR, and I know that's what your question is. All right, great question. All right, and a lot of times it's a little different. Sometimes the interest rate is definitely higher than the APR. So when you look at that, you'll be like, okay, well, what is this? I think I'm paying this and not that. But it's just the way they do the calculation and the terms that they use. All right, good question. Question out here. All right, to PROBY'S Tax and Accounting, you guys, if you have any questions regarding this matter, give us a call here at PROBY'S Tax and Accounting at 323-290-9034. Or go visit us at our website at PROBY'stax.com, guys, PROBY'stax.com. You're going to need a lot of tax consultation when it comes to whether or not you want to refinance your house, whether or not you want to reinvest money. Your tax consultation is very, very important, you guys. Don't hesitate to give us a call so you can make sure that you're on the right track with all this. And believe me, it is totally beneficial for you all the way around, and it will serve you great purpose if you go ahead and refinance. If you have the equity in the property, reinvest, build your portfolio up, and take advantage of your taxes. All right. So again, I have one more question here. Do I need my taxes done to refinance my home loan? Yes, guys, you always need to have your taxes to refinance your home loan, to buy a property, all this stuff. You always need to have your taxes done. The first thing the lender is going to ask you for is your tax return. It is so important to have your tax return done, have them current, and making sure that, of course, if you are self-employed or you own a business, to make sure that you guys have your income and expenses put together, make sure that you have enough cash flow flowing through so you can qualify for the loan. All right. And the interest rate is going to be any lower, or should I refinance? No. Well, you know what? It is at an all-time low right now. It is in the low twos. Now, interest rates have been below that before. So this is a very good time. It's going up and down, and all depends on what the economy is doing. I don't think that this is a bad time to refinance because the rates are low enough right now. I've got lots of clients who have refinanced lately, and have all taken advantage of the low interest rate, and I have clients that are doing it as we speak. So yes, this is a good time to do it. The rates are at an all-time low, guys. So go ahead and do it right now. If you have enough equity in your property and your interest rate is anywhere between 1.5 or more. Okay, you want to do it then. You want to do it now. All right. So with that said, guys, I want to thank y'all for jumping on, and I will be back here next Thursday afternoon, guys. We're going to keep this going. Just as a matter of fact, every week, you guys, you can get your question. Once you see the topic, you can get your questions. And we want to bring you some more information on a regular basis. Again, Elaine PROBY'S, CEO, PROBY'S Tax and Accounting. And we have operated a financial service firm here in Los Angeles for over 35 years. And we have helped a lot of clients make great financial decisions, save on their taxes all the time, build their business, and are very successful now, and want to make sure that you do the same. All right. Can you help me refinance? Okay. Did you not? Yes. Linwood, yes, we can. I have a team that we work with that are all incorporated within our business that we can definitely help you with that. So give us a call at the office at 323-290-9034. Okay, and we can definitely put you in the right direction for that. Okay. All right, guys. So with that said, I want you guys to have a wonderful Thursday afternoons. Take care of yourself. Take care of each other. And you guys have a blessed day. Stay safe. And listen to all the instructions, guys. Listen to all the instructions. We need to stay safe. All right. So we can see each other real soon. All right. Take care. And thanks for tuning in. Bye-bye.